Hello and welcome everybody to the channel. Today we are going to be doing a quick stock analysis of UnitedHealth Group, ticker symbol UNH, and determine if their current share price of $524.81 is attractive enough to buy at this level. UnitedHealth Group is the largest healthcare plan provider in the United States and is a member of the Dow Jones Industrial Average. And in my opinion, it is one of the top 5 stocks in the Dow Jones Industrial Average. It has a current market cap of $493 billion and a PE ratio of 23.5, and based on my own analysis, a forward PE of 20.1. The stock has been very attractive for investors over the past 10 years. As you can see, it has a 627% return over the last 10 years. However, year to date, it is relatively flat. A couple metrics I want to point out before we dig a little deeper. The gross margin percent is currently at 24%, which is a little bit below their 5-year average and a little bit above their 10-year average. And their operating margin is currently sitting at 8.83%, which is above both their 5 and 10-year average. And they have an extremely healthy return on invested capital of 15.6%, which is also above their 5 and 10-year average. Another metric I really like is the return on capital employed, which is 24.75%, also well above their 5 and 10-year average. We like to see return on capital employed above 20% on a consistent basis. They currently pay a dividend of $7.52 per share, which yields 1.37%, and that is currently above their 5 and 10-year averages. Before we dig into the various valuation methods, I do want to point out a couple of things from their latest Q2 2023 earnings. They have a couple different reporting segments. United Healthcare, which is their main health insurance plans, up 13% 6 months ended this year, and they have their Optum segment, which is up 25% 6 months this year. And like I mentioned earlier, their stock price is relatively flat year to date. However, they have shown extraordinary growth this year in their revenues of 15%. Despite that growth this year so far and their share price remaining flat, I do think there could be some value that will be unlocked here in the near short term, as well as if you hold on to the stock for a very long period of time, which is what I certainly plan on doing. With Healthcare United's earnings release coming out next Friday, actually on October 13th, I am curious to see a couple different numbers about where their revenue growth is going to continue on in the future, and that's primarily people within their healthcare plans. Obviously, the more people, the more premiums they will get. And I do like this Medicare Advantage and Medicaid, just the senior citizen group as a whole. You can see that so far this year, it is up 5% over the same period last year. And knowing that there's roughly 60 million people currently in the United States, ages 50 to 65, that means there's a lot of people that will be going into the Medicare and Medicaid programs over the next 15 years, which should serve as a primary growth driver for UnitedHealth Group. Coming to the charts section of our evaluation, I love charts like this where everything is just up all the time and virtually no downside at all. You can see that revenue has just increased steadily year over year the last 10 years. Earnings per share has had steady growth as well, with virtually no declines even during recessions. And they've also have a healthy, robust share buyback program. As you can see, the shares outstanding has decreased steadily over the last 10 years. Glancing at the balance sheet charts and specifically at free cash flow, the free cash flow has grown nicely over the last 10 years. And one of my favorite things about UnitedHealth is they are not a capital intensive business. As you can see that the capital expenditure is extremely low when compared to the type of operating cash flow that they generate. They've also maintained a very healthy debt to equity ratio at around 0.8 for over the last 10 years. And one last set of charts I would like to point out, we can see that the net margin has increased steadily over the last few years, as well as their free cash flow margin also increasing steadily here. And the other very important thing in my view for UnitedHealth Group is their dividend increasing at a very healthy clip over the last 10 years. Coming over to my growth rate assumptions, I am assuming that revenue in the next 10 years will grow at 7%, net income will grow at 9.6%, earnings per share at 10.2%, and free cash flow growing at 8.5% over the next 10 years, all of which, in my view, are very conservatively estimated, given that revenue is at 11% over the last 10 years and free cash flow is at 14% over the last 10 years. I estimate also a free cash flow conversion, which is how much net income UnitedHealth turns into free cash flow, at about $1.05, well under their prior 5 and 10-year averages, keeping my estimate very conservative going forward, and that gives us a free cash flow margin in year 10 of 8.3%. And once I have my growth rate projections here, I plug those free cash flow projections into my discounted cash flow model, and then I discount them back at 8% with a 3% perpetual growth rate. That gives us an intrinsic value of $742 billion, and with 940 million shares outstanding, that's a discounted cash flow price of $790.13 per share. And going over to our dividend discount model, we can see that UnitedHealth Group has done an excellent job growing their dividend in the last 10 years, 23% per year over the last 10 years, and at 14.29% from 21 to 22. And this year they raised their dividend and it's at an increase of 13.9%. I'm estimating a 13% increase over the next 5 years, which I think is very reasonable given their dividend increases historically. And I am estimating a perpetual dividend growth rate of 6% thereafter. I think that is more than reasonable given their 18.5% free cash flow payout ratio, and that gives us a dividend discount price of $434.01. Now looking at our exit multiples model, I have chosen for pure comparison Elevance Health, Cigna Group, and Humana, and their average PE comes to 16.17, comparing that with UnitedHealth's current PE of 23.48. That gives us an exit multiple price of $361.33. And finally, the last valuation model we're going to look at is Ben Graham's valuation model, with a 1-year forward earnings per share of $26.15, the PE of a no-growth company at 7, the next 5 years earnings per share growth rate of 11.44%, the average AAA corporate bond yield is 4.4%, and the current AAA bond yield is at 5.56%. Now that gives us a Graham's valuation model price of $381.64. However, I would like to point out that this current AAA corporate bond yield is very high historically, and that's driving the price down of this model. And finally, back on our investment summary tab here, wrapping all those valuation models together, we get a final price here of $790 for discounted cash flow, $434 for a dividend, $361 for our exit multiple, and $381.64 for Graham's valuation. Now, we do have a current share price of $524.81. And averaging all of those models together, that gives us a valuation average of $605.46 with a potential upside of 15.37%. We do want to put in a margin of safety. So if we have a 10% margin of safety, that gives us an acceptable buy price of $544.91. But if you want to be a little bit on the safer side, at a 20% margin of safety, that is $484.36. So I would advise you to wait a little bit longer for that share price to come down before making a purchase. However, personally, I don't mind using a 10% margin of safety, especially given the UnitedHealth Group's stature as a Dow Jones company and the incredible track record of management allocating capital over the last 10 years. And I feel like over the next 10 years, I would love to see the share price look a lot like the last 10 years. Although with that said, I certainly encourage everybody to do their own research into UnitedHealth Group, and that this is certainly not financial advice. And that wraps up our discussion today of UnitedHealth Group. Thank you everybody for watching, and what do you think? Let me know by commenting below, and if you haven't done so already, hit that like button for this video. And if you like content just like this, please subscribe to the channel. It really helps us out, and it lets me know you want to be a part of a great community of quality investors. Thank you again, and happy investing.